Well, happy Monday. I hope that all of you had a fantastic weekend. I was actually teaching a 2-day class this weekend, so I was busy, and I hope that you were productive. Um, let us see what's going on in the market. We're kind of starting off with a snooze fest, although it's picked up a little bit here in the last few minutes, but it's early. And it's Monday. It is September 22nd. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So, what is moving the markets? Well, they've hit fresh record highs last week, and so far this morning, that is continuing with the market up a little bit to start this week. So it's been a fun ride the last 3 or 4 months. We have a potential government shutdown September 30th. How is it that every time we come up against a budget that there's the threat of a government shutdown? It is like watching little kids. I'm going to take my ball and go home if you don't do what I want you to do. It's just remarkable to me that we live in a world where elected officials, just across the board, both parties, it is almost impossible to find anybody who acts like an adult, that acts like normal, where they communicate the way that just normal IQ human beings interact with each other. I've never seen anything like it. How many times have you heard the threat of a government shutdown in your life? Over and over and over again. Anyway, there won't be a government shutdown. By the way, we're entering the worst week of the year historically for the stock market. For the last 5 years, I think on average, the S&P has been down 4.2% for the month. So far, this month's been just fine. And we're starting off the week. So far, so good. But just, be aware. And the only reason that it's significant is that other investors and traders know this and tend to pull back. I'm not seeing evidence of it yet, but, the market's only been open for a couple hours so far for the week. So we'll see how it plays out. 10-year Treasury ticked up a little bit. We're at 4.141, which is still a great rate when it comes to equities. And oil prices have been steady in the 62, 63, $64 range for a while now. Market breadth was fantastic last week. When you look at the number of new highs versus new lows, and these are 52-week highs and lows. I mean, look at that, 364 to 76 on the New York Stock Exchange. On the NASDAQ, 805 to 187. Now, advancers versus decliners for the week was not that impressive. In fact, there are a few more decliners on the NYSE than advancers. Not true on the NASDAQ. Many more advancers than decliners by like 1,000. And the winners are, Intel made a big move. I do covered calls on Intel, so I had to adjust those in the middle of the week. Up almost 23% on the week. Synopsys, 16%. CrowdStrike, 15%. Applied Materials, 13. Seagate, almost 13. Monolithic Power, about 10. Western Digital, the same. Cadence, 9. Lam Research, 8.5. KLA Corp, a little over 8. Yeah. Private payrolls, I've been talking to you about this. They are basically at the zero line in terms of job creation. Look at that. So I am definitely watching, as is the Fed, the labor market. So we're seeing job creation slowing. We are seeing initial jobless claims rising, not dramatically. We're seeing unemployment. It's ticked up a little bit. Powell said in the last Fed announcement he expects unemployment at 4.5% by the end of the year. We're at 4.3 now. So that's not great news. Hopefully, these rate cuts, we're expecting two more this year, are going to help. So, who wins when the Fed cuts interest rates? And I'm going to tell you, when I looked at this, it surprised me. I would have instantly thought technology, but notice we have two or fewer cuts. The big winner is industrials, um, energy, and technology. On the other hand, if we're looking at four or more cuts, then it seems to be all the defensive, healthcare, staples, energy, utilities. So let me tell you what that indicates to me. And I'll give you my thesis behind this. When the Fed is cutting rates, typically it's because they're seeing some weakening in the economy. So there is sector rotation into the more defensive sectors. And those that are underlined right there, those are the defensive sectors. Those are areas where no matter what, people are still going to have to spend money. So I thought that was kind of fascinating. What to watch this week? Got some inflation data coming out. That ought to be interesting. So today, a bunch of Fed speak. Tomorrow, we're going to be getting the services and the manufacturing PMI numbers. So we'll get a sense for how the economy is going. Those are forecasted to be lower than the previous month. We have a speech by Fed Chairman Jerome Powell Wednesday, Fed speak Thursday. Now things start ramping up a little bit. What's of interest to me, initial jobless claims. So the previous week, they came in at 231, which was down significantly from the week before that. They're expecting that to move up a little bit. GDP, the third estimate, supposed to remain at 3.3%. And then on Friday, Friday's going to be an important number. Um, Personal income, personal spending. So that is supposed to tick up 0.5%. And then you get the Fed's favorite inflation index, the PCE, personal consumption expenditure. They're expecting that to move up 0.3% month over month and year over year to move up from 2.6 to 2.7. When you look at core, that takes out um, food and energy, expected to remain right where it was last month at 2.9%, but that's still a ways away from the Fed's target of 2%. Have they given up on 2%? I don't know. And the following week, I'm already looking forward to the ADP numbers coming out, and then the U.S. Um, employment report. So I am really watching the labor market. That could be a precursor for a recession. I don't think we're going into recession right now, but that's what you got to watch. Last week's heat map, Apple had a great week. Tesla had a great week. Oracle, Palantir, Synopsys, CrowdStrike. We talked about all of those kind of flying under the radar. IBM, Intuit. You see a lot more green than red. We did see Broadcom fall 5.5%. NVIDIA was actually down a little bit on the week. Market sentiment, that's improved a whole lot, right? Previous week, we were at 28% bullish. We jumped to 42% almost. But look at the bearish. Even though it went down week after week, there's still just as many people who think over the next 6 months, market's going to go lower than higher. With these rate cuts coming up, I don't see how that's possible unless we just end up having some problems with inflation, which is a possibility. Let's take a look at the charts. Those ought to look pretty tasty. SPX, where are you? Sounded like I was looking for Scooby-Doo there. Scooby-Dooby-Doo, where are you? All right. That is a thing of beauty. I mean, let's just keep that, right? Forever. And we all just ride off into the sunset, wealthy as hell. That's a perfect looking chart. It's a 6-month chart. Look at the 50-day moving average. This is in spite of tariffs, gang. So all the tariff stuff happened over here. The real saber rattling, but things have calmed down in the markets. Markets are in great shape. And we're at all-time highs. Let's see what the Qs look like. I haven't checked in with those in a bit. NASDAQ 100 Trust. Yeah, even better. What I like is that we haven't seen a parabolic rise, where I'm always worried about the big pullback. So, yeah, all-time highs there as well. So it's always nice, when I can come on and give you good news. Well, that is good news. Everything's cooking along just fine for the moment. Let's see how we do this week. We get through this week in good shape. I think the rest of the year could be pretty awesome. All right. Well, you have yourself a fantastic rest of the week. I'll be seeing you soon. Till then, be well, be safe, be blessed. Bye for now.